Hey everyone, me Kevin here. I am warming up to Bitcoin and crypto because of something I just found out from the government about crypto, and it blows my mind. It has the potential, what I'm about to tell you has the potential of entirely transforming any kind of high yield savings account you've ever thought existed or lending institution you've ever thought existed. So, this is a big claim, and I've got a lot to work on here, and I want to start from the beginning, but we're going to keep this concise. Let me start by saying, I'm just warming up to cryptocurrencies. I have always said I've stayed away from Bitcoin solely because I'm clueless about it. But the more I research about Bitcoin and its relation to ordinary measures of inflation versus real measures of inflation versus its functionality in commerce, the more excited I get about it. But wait. Hold on, don't YOLO everything. Before you YOLO everything, you gotta finish watching the video, and you gotta make sure you get your 4 free stocks with Webull when you deposit $100, and your free $30 when you deposit $100 with M1 Finance. That means for watching this video, you could get paid $51 if you open an account with both of those and deposit $100. Links down below. Okay, let's talk about what got me started here with cryptos. So, I spoke to JP Morgan, and I got to speaking to one of their bankers and talking about the fact that JP Morgan has a stable coin that they're testing. Now, this isn't a secret. In fact, they have a whole website dedicated to their stable coin about the benefits of it and what they're testing and blah, 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 blah. It's no secret. Basically, $1 equals one of their JP Morgan coins. This is called a pegged currency or a stable coin. It's the same thing that China does. They peg their currency to the value of the US dollar, so that way when one goes up, the other one goes up. When the other one goes down, the other one goes down. It's the same thing. It's pegging a currency. But the reason JP Morgan is researching a stablecoin is because the only way to use the blockchain ledger system, which is freaking unreal in terms of benefits, which I'm not going to bore you with all of the details about all this. I just want to bore you, well, I want to excite you with the new exciting information. In order to use the blockchain, you actually have to have a stablecoin or a cryptocurrency of some form. It doesn't have to be stable. Look at Bitcoin, and you already know that cryptocurrencies do not have to be stable. But anyway, JP Morgan is testing these because they're like, oh, this is cool. We can have instantaneous cross-border transactions, aka across countries, and these transactions, are safer, faster, and cheaper, which that really piqued my interest because I'm really interested in investing in banks and particularly newer fintechs. Well, the boss dude over at the OCC, basically the government agency for regulating how banks handle transactions, just released a paper titled Charting the Future of Fintech Technology. And in about 6 pages of this 35-page document, he talked about cryptocurrency. And what I'm going to do is I'm going to show you what the government just said about cryptocurrency. And it's really, really cool. Some of it might sound familiar, but realize when I tell you about this, it's the government now telling you about it. Some of these other implications, well, you might not have heard about these before. So let's jump into this. First, the OCC dude, the boss dude, clarifies that national banks may act as custodians of crypto assets, aka banks can now hold the reserve balances for cryptocurrency providers. This is big, but it's not as big as the very next line here in yellow. These actions reduce regulatory uncertainty and simply recognize the fact that crypto assets are a significant and growing part of the global financial system. Right here, that line, gold. Abso-freaking-lutely gold. On top of the fact that the United Kingdom and the EU also seem willing to pursue similar initiatives. But that's not where things get exciting. In fact, in my opinion, things start getting exciting over here, under the several identifiable advantages of cryptocurrencies, whether they're stable or not. This was interesting. Right here, I first identify several advantages. From permitting stable value crypto providers, now I know we're not talking about Bitcoin specifically right now, I'm going to talk more about that towards the end, we'll get to that, to eventually develop a new non-depository payments network separate from the existing central bank-based network. Basically, the government dude is saying, wow, we can have an entire payment network that is entirely independent. This is why they call cryptocurrencies often decentralized currencies, entirely independent of the Federal Reserve's clearing system. That's pretty cool. But it also bestows some pretty incredible benefits. And that's going to be where the surprise is towards the end. I'm going to hit these benefits really fast, then I want to hit the surprise. So first, real-time settlement. Oops, I erased it. Real-time settlement at the speed of light. Yep, we already know that cryptocurrency transactions are fast. Then he talks a little bit about how banks might be able to set these up, but we don't really care so much about that. Instead, this was interesting. Look at this. This is the government dude forecasting what could potentially happen. It is realistic to imagine that coin holders would demand these stable value coins rather than deposits in a conventional bank. Well, he's asking that question, and then he says yes for several reasons. So wait a minute. We've just now skipped a few pages here, and I'm going to just give you the bottom line here. He talks about how great stable coins are and how great cryptocurrencies are. And again, I'm going to talk about Bitcoin in a moment. So he talks about how great stable coins are and cryptocurrencies. Talks about how it's fast and secure and there are benefits, blah, 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 blah. But then he's now prophesizing what could happen in the future. Is it realistic to imagine that coin holders, so if you have a crypto coin, would demand a stable coin rather than dollars in a conventional bank? So let's say you had $10,000 in a high yield savings account and you're getting 0.5% in interest. So you're getting $50 in interest a year. This individual, this boss dude over at the OCC, is saying, well, if instead of them holding your $10,000 of cash, which has much more overhead, you could hold a cryptocurrency, and now the bank has basically zero overhead costs, and more realistically, he's clarifying, the overhead costs are much lower. Obviously, costs aren't going to be zero than a conventional bank. Excuse me. So it is able to offer a higher interest rate on coins than depository banks can offer for deposits. AKA, in the future, high yield savings is literally going to be made up of stable coins, AKA cryptocurrencies, instead of cash, because banks are going to be able to pay you more interest on your stable coin than they'd be willing to pay you on your cash because it's so much cheaper to operate with. So instead of you getting maybe 0.5% over here, maybe they could pay you, and I'm just making this number up, 1 to 2% over at the stablecoin. Who knows? Maybe not that much of a range, but the point is they would be able to give you some kind of premium because it is cheaper to hold a stablecoin for you essentially as a bank. Then they say that stablecoins are much more useful than cash. A payment can be made with instant finality, aka there's no pending transaction. It's like, oh, boom, boom, it's done, like the speed of light. Then if you actually use a transaction, you can choose to convey selective information about yourself. Hey, I'm over 18, so I qualify to gamble online, and I live in California, so I pay California taxes. Boom. Unlike a credit card where you're giving your credit card number, your name, your address, your zip code, and all that crap, you have a lot more privacy. But also, the blockchain payments network is less vulnerable to cyber attack or hacking than the existing centralized payments network operated by the Fed. Look, I know a lot of you who are like gung-ho on cryptos, you're already like, dude, I know, this is why it's so great. But the point is, the OCC is now saying it. That's really good. In fact, listen to this. Eisenbach, Kovner, and Lee, a publication or like a research study, argue that a cyber attack on a member of the existing centralized banking network will disrupt payments throughout the network, with large spillover effects on other banks and their customers. But because the blockchain clearing through a decentralized network offers an environment that is much more secure from hacking, coin holders throughout the blockchain-based network bear less risk from hacking or cyber attacks. Dudes and gals, this is the government saying this about this stuff. This just came out, by the way. Like, this is incredible. Anyway, then of course, because with stablecoins, or really most cryptocurrencies or any cryptocurrency, there is a permanent record of a transaction built into the blockchain, basically the ledger. That would open the doors to preventing fraud or preventing money laundering or tax avoidance. Okay, so those are some neat benefits, and Bitcoin benefits from a lot of these benefits as well. It's safe, it's efficient, it's fast. However, Bitcoin doesn't yet have that government access to all transactions. Now, I'm sure that's going to come, and it's already been proposed. The interesting thing here is Bitcoin is really fascinating because it's the biggest and most notable cryptocurrency that's seen as an investment into the future of cryptocurrency. In other words, if you want to invest in cryptocurrencies, you have a few choices. You can invest in Bitcoin mining companies or other cryptocurrency mining companies, Bitcoin being the most popular, obviously. You can invest in Bitcoin itself. You can invest in altcoins or alternative cryptocurrencies. You can invest in a company like Square or PayPal, who might benefit from the transaction costs related to Bitcoin, but unfortunately Bitcoin is so expensive to handle. For Square, they spend more money on Bitcoin than they end up bringing in. So maybe not investing in Square for Bitcoin. Bitcoin mining companies, heavily exposed to price volatility, and obviously so is Bitcoin itself. Altcoins can sometimes be like penny stocks, where it's kind of like, I think this one's gonna make me an instant millionaire, and you kind of place your bets on the roulette table, and it's like, which one's gonna hit, right? But, Bitcoin, well, let's just say in terms of Bitcoin volatility and fluctuations, it's been a little all over the place. Over the last 200 days, its price has traded at 179% above its moving average over the last 200 days. That's 3 times higher than what the NASDAQ 100 hit in the days of the .com bubble, which is crazy. In the last 20 trading sessions, the coin was up 120%, only to sell off today when it fell as much as 20% and settled down around 16% down at market close. The thing is up 900% since, the last crash in 2018, and has a history of substantial sell-offs. But then massive leaps to new highs. So how do we put all of this together? And what's my point of view? What do we do with all of this information? And after all, I'm warming up to this, but here's my thinking. So this is a developing thesis, and I'm curious to know what your thoughts are on this. Number one, I do not believe that Bitcoin will replace fiat currency. It strips too much power from central banks and government's ability to deficit spend, aka print money. However, I do believe that stable coins and cryptocurrencies, whether or not they're stable, will end up taking over the world. I believe that stable coins are going to be what is used in the future when it comes to high yield savings, maybe even bonds, or even tools for lending money instantly and securely and creating that record of having lent money without you having to go through an escrow and recording documents and all of this. I still think, for example, real estate transactions are still going to take time because they're complicated, inspections and finding a home and all this sort of stuff. But there are going to be a lot of things that can be streamlined with cryptocurrencies. Right now, if somebody wants to lend you money, it's disastrously complicated. And so the potential in lending and banking with stablecoins or other cryptocurrencies, very, very interesting to me. But now, keep in mind, Bitcoin is not a stablecoin. It's, as I just described, all over the place. But that brings up thesis number 2. My second thesis is that as stablecoins gain popularity, people will probably fall in love and become much more familiar with the potential for cryptocurrency and blockchain technology. This is likely to create demand from people to invest in something that has the potential of also going up in value, but also takes advantage of the benefits of cryptocurrency. And we've already seen a lot of that movement. We've seen a lot of institutional money recently move into Bitcoin. We've seen, a lot of retail investors move into Bitcoin. I think a lot right now has been an institutional push, which is a very big shift from what we saw in the 2018 run-up. That's very good. That could be because people want cryptocurrency exposure, and maybe hedge funds are doing that because their people want it, or who knows what came first, the chicken or the egg, doesn't matter, right? There's also the potential that it could end up being a digital gold, but I do not believe that Bitcoin is a digital gold today. In my opinion, it's too volatile to really be deemed a digital gold today, but it could end up settling as a digital gold in the future. This makes Bitcoin very interesting because it is an asset that has a limited supply. It is an interesting asset that you might want to keep in your portfolio because based on this thesis that I have, it's very possible that if every bank you go to in the future turns your money into a coin, we are going to, as a society, become so used to cryptocurrencies and the blockchain, and we become ultra familiar with using it as a means of transacting, and transactions become faster and safer, that we're also going to want faster and safer investments, and potentially by that time, Bitcoin's volatility will have settled down, probably well, possibly much higher than where it is today. If you listen to like Cathie Wood at Ark Invest, she says it's going to $500,000. Maybe. Some people say it's going to 50K, some people say it's going to 100K, some people say it's going to more than $500,000. Whatever. The point is, Bitcoin is really interesting because if this whole thesis about the stable coins and other uses for cryptocurrency becomes a reality in the future, that doesn't mean that Bitcoin becomes a replacement currency of the world, which who knows? It could. I don't think so. But in the future, once its volatility settles down, it is probably going to be seen as a digital gold, and that begs the question: does it make sense to get in sooner, or if there's a continued dip in Bitcoin prices, does it make sense to move more of your portfolio into Bitcoin? See, a lot of people see Bitcoin as speculative. I personally don't see Bitcoin as speculative as a lot of other people say it is. I personally think it's volatile, but in my opinion, volatility is different from speculation. See, with speculation, I always picture a roulette wheel. It's like, all right, I'm putting $5 on 32. I hope it hits, right? That to me is speculating because, I have a hunch, I haven't seen 32 come up in a while, or, it's been red many times in a row. I think it's going to be black now, right? That to me is hunch-based speculation, or maybe there's another reason for speculating. If you're guessing, you're speculating. It's a superstition or hunch or whatever. Bitcoin to me isn't speculative. Bitcoin to me is extremely volatile. But I think it's here to stay. In fact, I'm almost certain it's here to stay. And I'm almost certain that Bitcoin is going to, once it settles down, be probably much more valuable than what it is selling for today. I do think we have some insane volatility to get through. And that's because this is, it's almost like an immature company. Immature companies, their stocks can do this. And then when they mature, they become more predictable. Their price movements become more expected, and they begin to settle within a range of an expected value based on what people are willing to pay for it. That is a downside of Bitcoin. It is not a productive asset, as Warren Buffett says. It is simply an asset that is valued based on what we're willing to pay for it. And we hope that the person who will buy our Bitcoin for us is willing to pay more for it. And because there is a limited supply of it, short of, I suppose the internet short-circuiting, I think Bitcoin is definitely here to stay. And I see a really good future for Bitcoin. The biggest catalyst for really getting Bitcoin mainstream, though, I don't think it was this year where we've got Bitcoin going to the moon, because I still think the vast majority of society is highly disconnected from what the heck the blockchain even is. And I really think ushering in the stable coins, based on what we saw the government here talking about, and getting people so familiar with the blockchain, could usher in stability to Bitcoin as an investment extremely quickly. So I have a bull thesis on Bitcoin. I am not confident at this point in my research, since I'm just warming up, to officially pull the trigger and go in heavy. Right now I'm on a little bit of an investing diet because I've got to pay off some margin. But I'm getting close. And if you want more updates, consider subscribing, and I'll keep you filled in with all my thoughts on Bitcoin and cryptocurrency. Thank you so much for watching. If you found this helpful, consider sharing it. And folks, we'll see you in the next video.